It's Friday the 16th of October. I'm going to do the live trade quickly. I'm going to do slightly different today. I'm going to show you how to trade very conservatively. So if you're a learner trader who keeps losing, I'm going to show you a good way to trade so that you can cut down your losses and just trade a little bit safer. So the market opened at 8. We've made huge gains overnight on the FTSE. The market has then fallen away, and we can see the signal candles here, which is actually the 8 o'clock open. I entered above the high, entered on this candle here. The market fell away, and now it is just starting to push higher. What I'm going to do is, if the market gets to +5, I'm going to bring my stop to break even. That's a very good way to protect yourself when you're first learning how to trade. You'll get stopped out more often at break even. However, you will have a lot fewer losses. When the market then gets to, if it gets to 10 points, I'll close out 50 or 75% of the position. When the market then gets to 15 points, I'll close out another 50 or 75% of the position, and it will go on like that. It's a very safe way to trade, and it also works. It's when I was first beginning to trade, after I had suffered countless losses, lost a lot of money, this is how I started to do it. This is how I started to build my confidence back up. I just traded very conservatively and focused on maintaining my account and building it very slowly. So the market is pushing slightly higher. I'll show you why I identified this zone once the trade completes. However, it's fallen away. We've got the signal candle. We're now in the trade. We're 2.5 points into profit now. The market is moving very slowly this morning. I'm not too sure why, to be honest. I've had a look at the news releases. There's no large news releases coming. Sometimes before a news release, the markets will go a bit stale. So we're at 5 points. The stop is now at break even. It's always a mental stop for me. I'll always close it out manually, just because when I bring the actual stop up to break even, if the market gets to, say, plus 0.5 points, it will quite often close you out. Whereas I like to close it out manually when it actually gets to break even. I'm just going to take off this limit order. It's just an automatic limit order. It pops up automatically for me. As you can see, I've always got it set up here. So we've got to 10 points. 1 second. So if we get back up to 10 points, I'm going to close out 50% of this position. It's just bouncing around a little bit. The market's never moved exactly the way you want it to. It never just moves straight up. You can actually see after I entered, I was on the PC here. I entered the market then, so that's 10. Sorry guys, the video software went a little bit haywire there and took me out. I've already closed 50% of the position. We're now at 16 points, so I'm going to close out another 50% of the position. Very simple. So I'm taking profit off of the table as we go. We're now at 15 points. We're down to 1/4 of the original position. And what I'm going to do is, my stop is now at 10 points. That's the last place that I took off profit. So as the market comes back down there, you can see it's coming down now. 10.7, so I'll just close it there. And we're now out of the market. So I'm not really sure why the video software crashed there, but I'll talk you through it. So we entered above the high of this candle. The market then shot up, poked up above the high. I entered, the market then fell away, sort of bounced around a little bit. It then moved up at plus 10 points, which was around about here. Oops. We took off half of the position. At 15 points, we took off another half of the position. Now, once it got to plus 5 points, This is the important part. So this is +5 right here. When it got to here, the stop moved to break even. Now it was a mental stop for me. I've already explained why. So we were now in a free trade. Nothing can happen that's going to lose us money. The market then pushes up to 10 points. We close out half the position. It then pushes up to 15 points. We close another half the position. As we close another half here, this stop moves up into the 10-point zone. As the market falls down into 10 points, we get stopped out. We've already taken profit off and we've got stopped out for another profit. It's a very good way to trade. Not only when you're learning, it's good regardless. It works very well. And it protects you from losses, especially if you suffer from emotional trading. So let's have a quick look here. I'm going to show you why we identified this zone. So this is yesterday's price action. Now this is 24-hour candlestick. The FTSE actually closes at 4:30. What was important for me was the FTSE yesterday. This is actually where the FTSE finished trading, in this zone right here. We can see it's the bottom of the tail of this candle. And we can also see it's the top of the tails of these candles. It's actually also the top of this candle here. Now it tied in with the key zone. You can see the black line right there, which is at 6360. And if we scroll back, we can see that 6360 is here. So it's tying up with these two large tails and this large tail right here. So that's why that's a key daily zone. The market then, pre-market, fell down into this zone. It's already positive. We've already had this very large run-up. We've then had a pullback. We made a very large candlestick yesterday. The market has then fallen away pre-market right into this zone. I got a buy signal and I rode the market up. So it's a very nice way to trade, especially if you do suffer from emotional trading, as I've said. It can protect you from a lot of losses and it can help you build your account very nicely. Okay guys, I hope you enjoy your weekend and I hope you've had a great trading week. I'm James Orr, thank you.